Hello there, you're watching IG. We finished the working week early here in London as we get set for the Easter weekend, which starts on Good Friday. And most major global markets will be closed on both sides of the Atlantic. But let's have a look at what exactly is going on in terms of times and where you can be trading. So we've got our out of hours markets. They start today at 9 and then all European and US markets close. FX desk, they're going to wrap up things at 9. On Sunday, the clocks go forward here in Europe and that's for summertime. Wall Street, though, will be open on Monday. So let's have a look and see what traders can expect when they get back to their desks. So it's US personal spending and US pending home sales. So this comes on the back of more gloomy news from the US. We're going to talk about that in just a second or two because it's non-farm payrolls on Friday. But Tuesday is Japan's unemployment rate. We've got Italy consumer confidence and the US consumer confidence as well. On Wednesday, it's Japan. We're going to be really concentrating on Japanese economic data this week because there's plenty of it. It may shape the week. We've got German inflation, oil inventories as usual, and consumer confidence for the UK as well. Thursday's a big day because we have indeed got more from Japan. As I said, it's a busy one for Japan. Australia, Germany, UK, Eurozone, US. It's a global theme on Thursday. And on Friday, it is the crucial non-farm payrolls coming from the US. We're going to talk about that in just a minute or two, but first we've got Chris Beauchamp, and I just want to say let's rewind the clock to the beginning of the week because Japan, it's a big day for Japan. Obviously the government is trying to defend these negative interest rates. Abenomics, it hasn't really set the world alight just yet, has it? What are you expecting?
We'd like to see some improvement, certainly in construction orders for Thursday. Also, we've got that Tankan manufacturing index coming through from Japan. It's been an interesting few weeks in the dollar against the Japanese yen because once again, we've visited this key 111 level for the dollar against the Japanese yen. And while we've bounced up from there the last few days, that's been driven by dollar strength rather than yen weakness. But if we get more poor figures from the Japanese economy, you could see this trend that we've seen over the last 3, 4, 5 days starting to kick back into life, really. And if we're looking for further gains in this currency pair, really, it's this sort of 114 kind of level that we last saw, really, about 2 weeks ago, and that we lost over the course of that 2-week period. But overall, if we get improved data from Japan, you might start to see that start to shift really in favour of the US dollar. The optimism has come back because remember, dollar yen is always a safe haven play. If you have concerns about the global outlook, you tend to see this pair fall as we did in about 2 weeks ago. Nonetheless, if we start to move higher, that's sort of a sign that actually getting dollar strength, but also investors being more confident about the outlook for the global economy, and that should lead to an improved performance from the equity markets as well.
All right, let's talk about the UK then, because it is a very big week for the UK, and the UK is very much in focus at the moment because of Brexit, because of the volatility in the sterling as well. George Osborne's been taking a bit of a battering because of the budget. All sorts going on, and then we've got the GDP figures coming out on Thursday. Yeah,
we've got the final revision for those numbers expected to have a bit of a mixed figure. The quarter-on-quarter number is supposed to be revised higher, but the year-on-year number actually being revised slightly lower for the final reading. In terms of the pound against the dollar, you've seen a bit of a bounce off this key level 140.50, which you can see we revisited about 2 weeks ago. In this particular currency pair, and if we can maintain that bounce, then you might start to see actually a move back towards the highest of the month so far, above 144 for the pound against the US dollar. Nonetheless, Brexit, as you mentioned, is still the key concern, really. What happens there? It's been very quiet, actually, since we announced the referendum. And that's less than 2 months to go now to that actual vote. And so if you see further comments from the likes of Boris Johnson, the rest of the Leave campaign, you could see more volatility come back into this currency pair. So it's definitely the one to watch for the week ahead.
And we had some really disappointing retail sales as well. All right, want to talk about non-farm payrolls from the US because we've had a really strong US dollar, haven't we?
It's kicked back into strength, really, for the US dollar. Charles Evans, one of the key Fed speakers over the last few days, has said, well, we should probably expect 2 rate hikes from the Fed over the course of the next 9 months or so, whereas the market has been thinking maybe you only get 1. And so that's why we've actually seen improvement in the US dollar. And that's not currency pairs like the one you can see here, the euro against the US dollar, dropping below 112 for the first time now in a number of sessions. And actually, what was a rising trend you can see there throughout the first actually 4 weeks of March or so has now finally been broken. So with the RSI moving lower, with stochastics moving lower, I think you could see this unwind even more, perhaps down towards that red line, that 200-day moving average, towards the sort of 110 kind of area. And if we get below there, I think the risk is that you do see even more of a drop down towards the lows we saw in the first month of the year, down towards the 108 level. We're still a long way away from parity for the euro against US dollar, just in case anyone's thinking we're getting there soon. But certainly dollar strength is the key one at the moment.
Okay, so we've got Japan, UK, US. It's going to be a busy one. But in terms of corporate data, let's see, because we'll start on Tuesday, because a lot of people take an opportunity to go on holiday next week, so we don't have too many going on. But AG Bar's an interesting one because of the sugar tax coming into play. Mr. George Osborne is not particularly popular with this company right now. We've also got Wednesday to consider as well. Yeah, we've got Bank of China and Air China. Very interesting indeed, because this bank has been really lending out to their companies in order to boost their profitability globally, and Air China as well. They're really dealing with contracts to do with Air US as well. United Airlines. Thursday, well, actually, it's been a very difficult year indeed for TUI, and that's because of the terrorism attacks in Egypt and Turkey as well. So their stock has really been under pressure because of that. And on Friday, to finish off the week, we have got BlackBerry as well. Now, actually, interestingly enough, Facebook has just said that they're not going to be continuing their partnership with BlackBerry. And BlackBerry have said just recently they're very disappointed by this. Okay, not a lot going on in terms of corporate, but we want to talk about the week and the theme and just the general environment. What do you reckon it's going to be like?
Well, if you're watching the markets next week, and it is, of course, a quieter week, certainly for the UK, you expect to see weakness in crude oil. That's been the one to watch. WTI, US light crude, has been knocked back the last few days. We got up to about $42 a barrel for crude oil. Very strong performance from those February lows, but that seems to be unwinding now, and certainly that rising trend line that supported this rally all the way over the course of the last 5-6 weeks has now finally been broken. And while I don't think we'll revisit the lows of crude oil below $30 a barrel, it certainly looks as if we could see a bit more downside here, coming through maybe to $36, maybe $35 a barrel, and that would make life very, very difficult for the equity markets, because if you've been trading equities at the moment, you've essentially been trading the price of oil. And that's certainly what we're seeing at the moment, is that the downside move in oil is being amplified in equity markets. So if we look at the S&P 500 as well, that's the other one to watch. And again, it's all about this rising trend line. It kept us going through February, through March. And now as the quarter end just starts to come into view, remember, of course, it's not just the month end in March, it's the end of the first quarter of 2016 already. And you might start to see this downside accelerate. People book profits after a very, very strong rally in US markets and indeed around the globe. So watch US light crude and watch the S&P 500. Maybe we go back to 2000, and then from that point onwards, you might start to see buys return.
And the latest inventory figures for oil were about 3 times what was expected. So we've still got this oil glut in the system that is really a headache for a lot of people. Okay. Have a fantastic Easter, and we will see you next week. It's going to be a short week, but it's going to be jam-packed of eco data. Not so exciting for corporate, but as Chris says, it's all about oil and the S&P 500 as well. So enjoy your eggs and have a great weekend.